Hey everybody, we'll give people just a few minutes to come along, to jump in. Hey everybody, we got a few peeps showing up here. Nice to see you all. Drop me a little note in the chat if you can. Hello, Luis. I hope I'm saying it right. Luis Mazariegos. Luis Mazariegos. Oh, very nice. I love that. It's got a nice ring to it. Okay. My extra screen here isn't working. That is really annoying. Oh, wait. I see something. I see something. How's everybody doing? Wow, we just keep going, right? I mean, I was just saying to somebody in the Discord, I said, I'm a trader at heart. I kind of like back and forth, especially the sort of 15 years I was a market maker. I really wanted back and forth. Like that's how that job works better. And so this is kind of a weird market, but it just that the themes are too strong. The themes are just too strong, right? They're just so it's hard, right? Because stocks aren't always the market, right? The stocks aren't always the market, and the market isn't always stocks. But HDMI, enter. Okay, enter. No. But despite just very, very kind of negative sentiment and this idea that stocks are overvalued and have gone too far, the sentiment is very, very poor. We've never quite seen something like this. But the fact is that things are quite decent. Let me put this on here. Let's go with share the screen. Let's take a look here. I'll try not to put you into my vortex here. The vortex of that is my other one. Where's my little show that I was doing recently? Leaps Trader, probably this one. So yeah, so I mean, look, we've got this incredible environment that is. Oh, that's the wrong one. USAR. Well, we did talk about USAR. That this was an interesting one, right? And I for Leaps Traders, I threw in a kind of bonus trade, which was that turbo. And so we talked about this on Friday a little bit. And the way that the turbo works is, can you guys see my screen? I want to make sure you guys can see it. And of course, this is for educational and information purposes only. So your trade, your responsibility. Okay, thanks, Keith. I appreciate it. So we can see the thinkorswim here. So we've got some. I wanted to talk a little bit about Ethereum, right? So this is an area that was kind of struggling a little bit. It was interesting because we weren't getting follow through on crypto, which tends to be beta. It's very beta to the market, especially to technology, to the Nasdaq. And as AI was kind of continuing to push things up, it just kind of came down a bit. And I think part of it was there's always a little uncertainty surrounding stablecoin and who's going to win and all that. But since then, we've had this amazing move back up. Now, I was not selling calls down here. Why was I not selling calls? Well, because the option pricing really had gotten down in here. It started to pop up just a little bit, but wasn't quite where I wanted to be. Like you're sort of looking, when you sell calls, I've sort of had it out with some people on Twitter just saying, listen, you got to do things sensibly when you're a call seller, because what are you doing? You're giving away upside, right? You're giving away upside. So you only want to give away upside to the extent that we can, you know, rationalize these arguments, and we don't know the future exactly, but to the extent that we can, which is sort of looking at option pricing and saying, well, is it really high? Is it really low? Do I want to sell really, really low option pricing, right? So do I want to sell calls down in here? Do I want to sell calls down in here? Well, now we're starting to get into an interesting area, but now we have a breakout, right? So this is an area where we start to layer our edge. So as a cover call seller or a put seller or whatever you might be on the income side of things, you're sort of looking at this going, okay, we're getting a nice breakout technically, and we can see that we've got a little work to do before we get to those old highs on Ethereum. We are there already on Bitcoin, right? So we're making new highs in Bitcoin. So this is now leading, whereas Ethereum was kind of the lead of the pack there for a bit. Now we can see this starting to move a little bit and be that sort of alpha crypto again. And look at what we've got going on here. Look at the option pricing just absolutely exploding to the high levels of the year. So down here, I'm not so excited. Up here, I have a breakout, but I also am getting some value now. And I like getting value when I'm an option seller. I want value. Otherwise, I feel like, well, I'm not really getting compensated for what is my primary risk? Giving away upside, right? We're giving away upside. That is our risk. You don't think of it as a risk. Many people don't think of it as a risk, but they've learned that the hard way over the past year. And I've been teaching this stuff forever, but they've learned the hard way. I have people come to me and they go, man, I've actually done okay on my option selling strategies, but I probably left $500,000 on the table. So is that a risk? Should you think of that as a risk? Because that's week one of my programs. Not pushing anybody into my program, but is a risk for you not making enough to the upside when you should make more? Does anybody think that's a risk? It is, right? It is a risk, because when you involve yourself in risk markets, you are taking risk for reward. So if you put on a cover call position, you are limiting your upside in return for some premium, and you are accepting basically most of the downside. So you've now turned a risk product into something that has limited upside. So you're saying, I want to go into risk markets, but I'm going to limit my upside and I'm going to retain most of the downside. So you always want to think of that. So I have positions that, like Hood, that tripled before I started to sell some calls on them. And then I made some money on a few, and now I'm underwater on the last ones, but that's okay. I'm going to make 380% on that position. So you always want to look at different kinds of risk. Is making less money technically a risk that you're gonna, it's not gonna hurt you. Making money is not gonna hurt you, but you could have made more, and that's what we always want to think about. And that's been very, very, very a very sort of front and center concept this year, especially since April, because we've just basically had like a vacuum to the upside. And again, today, for all the people who think that AI is a bubble, we can put stocks in a category of perhaps getting a little bit too excited sometimes, right? Palantir at like a gajillion times earnings, making $4 billion, and it's worth 100 times as much. That's going to take some work to grow into that growth. Now they are one of the top stories in the market, so I have no doubt that it retains a significant premium for what it is, because it's one of my three horsemen, which, by the way, my other one is starting to make a move. So I want to look at a trade here today. So here's Snow, fantastic earnings, right? Then they burst the bubble a little bit. I started actually buying on this pullback because the numbers are so good, and it's such an important area for me, and it's cheaper than Palantir, that for me it was like, okay, that's really great, but it just kept going down, and it's come down and down and down. So I was suffering on some of those positions. I'm up on a whole bunch that I've been in for a while, but on new positions things haven't been going that well. But we've been getting into turbo trades, we've been getting into upside, other upside structures, and now we're finally getting some love to the upside. So this is a name that I'm it's on my radar again. It's a name that has struggled, but that happens, right? Reddit struggled at 125 and then it went to 260, right? There's stocks will struggle, and I like to look at their behavior. But if I really, really like a story, then I'm willing to kind of hang out in that name and see it play out. And so between Datadog, Palantir, Snow, Databricks is not listed. It's a private company. I think this is interesting, right? So we had fantastic numbers, and maybe they're starting to look at the possibility that this company beats again on numbers. And I think there's a good chance of that, because, if there's one thing we're going to create a lot of, it's freaking data. We're going to create so much data, we won't know what to do with it, and it's going to need to be filtered and crunched and for insight, and for this company, these companies come in. This company like Snow comes into a firm and just says, listen, this is where you can immediately start making a difference in your company. That's why it's so powerful. And their net retention, their revenue retention is huge. So that means customers don't just come and spend money, they stay there and continue to spend money. That's one of the best vote of confidence you can see, right? They come and they stay. They come for the music and they stay for the veal. I don't know. I think I got that saying a little bit wrong, but they love it, so they stay, and that's very, very powerful. So this is something where I've been kind of looking at these snooze, which is the 2-time. I own a little bit of this, but it's the 2-time product that gets a little bit chopped up when you get markets like this. There's a mathematical decay, leverage decay that you get with this, but it hasn't been too bad, because you can see that it's been volatile, but it's actually near the highs again. Now, if you do get a lot of volatility, the 2-time, the leverage products are going to get chopped. They just get chopped. And we saw that. That's why in the 𝐃𝐨𝐧'𝐭, remember, I was negative on it from 70, well, maybe from like mid 60s. I said, don't touch this stuff. If the bubble's bursting in semis, you don't want to be involved in this. And all the option sellers are going, yeah, this is great. I'm getting all this amazing premium. And the thing went to $7. So that's not what you want. You want stability. So here we are. And then at $17, I said, that's where I put out my famous video, which has been great for me because I've gotten so many people interested in what I do. And at $17, I said, this thing could be going to 40, 60, maybe higher. And here we are at 43. So when you catch a trend in these products, it can be pretty powerful, and the upside's been cheap. And that's why I have some members who've made like 6, 7, 800% in stocks, so millions. One made 1.7 million, one made 4.4 million. That's phenomenal. That's a heck of a lot more than I made, right? I'm not pretending to have made that amount, but people are latching on, and you can do very, very well in these trades. And so now here we are. I'm actually kind of selling a little bit more today, because I feel like the market has really kind of gotten a little bit not ahead of itself from a standpoint of the story. The story is not going to weaken. You can see it in everything that companies are doing. The AI story is in no way weakening. Can stocks get overexcited? Of course they can. Right. So that's the world that we're playing in. We're playing in the sandbox where we understand the push and pull between, valuations and stocks. And right now it's about stories. It's not so much about valuations, although I pushed into Micron for that. So let's take a look at the Micron. I want to kind of give you guys an idea of where we kind of got this very right, and how you can look at these things. So Micron blasted off, good earnings. And then I said, wow, these guys are in all the right places. and this is going to be a critical thing for data centers, et cetera. So I looked at the option volatility, option pricing, and I said, well, it's pretty cheap. Like down in here, it's just cheap. It had come off after earnings, and then it sort of blasted off again. And we'd been sort of building positions, and I said this across the market. I've said this on all kinds of shows that I'm on, public shows. I said, this is too cheap. These things are just way too cheap given what's going on in AI and how the uncertainty that brings to the market, positive, negative, right? Eventually, we're going to see some negative aspects to all of this. We're already seeing it in jobs a little bit. But anyway, you cannot have this once in a century kind of thing. And this is bigger than the internet itself, that you cannot have that with option prices sitting at multi-year lows. I said, this is crazy. You're going to get three things happen. You're going to make money if you buy calls on delta, which is direction. This is direction. You've made money on delta. I said, you're going to make money on vega, which is a pop of implied volatility, which I said has to happen at some point as we realize this is nuts. This is truly a very big regime shift out there. And then I said you can make money on your skew, which is happening as well. So look at what's happened here. And I want you to notice something very, very interesting. And that's that back in April, we have something similar to what's going on here. Right? We have something similar to what's going on here. Hold on, let me just check this. Let me go to make sure you guys don't have any questions. Is it this one? No, not that guy. All right, I can't see the questions. But you can see that we had a crash down in markets and we have a resulting move up in option pricing. That makes sense, right? That is your typical relationship playing out. This is fully expected. This is a crash up that comes with an extremely strong move. In fact, a stronger move than we saw back in April. This is a stronger move than we saw in April. So we've gone from about 44 to about 55, right? So that's a very strong move for long-term options. That's not unusual to see in like a 30-day, 60-day option because that's the tail that wags. So this is where you're seeing two very, very similar reactions, yet to very opposite things. And that is what was not accounted for here. Here, they did not account for the melt up that I've been screaming about for 1,100 points. This is now reflecting the possibility of a melt up. So now I'm trimming positions because not only have I made money on direction, which is your delta, and it's happened relatively quickly, which is good because the longer it takes, the more kind of a bit of erosion that you get. Not when vol's soaring, but in theory, you don't want this move to happen 5 months from now. You want it to happen relatively quickly. But we've made a bunch of money. We did this trade in Leaps Trader as well, and I've had a whole bunch of other kinds of things, which has made you money on delta, vega, and skew, which is kind of like a vega VAMA kind of thing, right? So delta, vega, vol going up, and skew, and that's really kind of a wonderful thing. It's what I said would happen, and I'm not always right, but this time those things played out kind of to perfection, and that's great. And so now the problem is we have made a whole bunch of money. So I figured out that I've made about 35% of my win. Right, I have one position. I have a whole bunch of positions, but on one position I made 17 grand, and probably about a third of that is from this move up in option volatility, which is well deserved because it was expected. I expected it, but at the same time, what if things calm down? We are now at 52-week highs in 1 year options, right? So now you have some risk, some vega risk, which means the vega you benefited from. Now there's a bit of a risk because now it could calm down as we maybe the market calms down. We certainly doesn't look like it wants to, but as we go into the holiday months and I think there's maybe a bit of a risk of this coming down. So now we're going to look at different kinds of positions in Leaps Trader because now we want to make sure we are trading the right kinds of edge, right? We're always layering that edge. So we've got a very, very nice move here. Unfortunately, I was busy. I should have been selling around 200. I was feeling a bit, look, I'm busy. I said to members, look, you do, you got to do, because I'm busy. So that happens sometimes in life. My stupid car needs a transmission in my truck. So here we are, but we got it at great levels, and everyone's doing their own thing. But at this point, you want to perhaps look at things that are a little bit more kind of conducive to the environment that we're in, which is an environment of high vol, high skew. And so that's where you can kind of take a look at things. If you were really still long, or wanted to be long Micron, which I think is still a great stock. I don't think it's very expensive. Part of the reason I got in is because it was cheap valuation wise. And so now you could pick up, something. You could pick up like a 200, 250 for $15. That's not too bad, right? That's not crazy skew, but you can see that they'll probably, as we go up, sometimes with the VIX, you'll see that it actually doesn't take off as much when the market comes off, because people are now selling out some of those protective positions. So it's mission accomplished. They own protection, and then they start to sell some out. So you can do something like that. Now, what you can also do is a cover call, right? So, and you guys might be surprised to hear that if you see my Twitter comments, because I think cover calls can be very challenged. But at the same time, we have some in Ethereum, right? So we've got a cover call in Ethereum. We've got a turbo cover call, which is kind of my invention, where you can grab even more upside with a cover call structure using a ratio. So we have two things going on in crypto income that are going to benefit from what's happening out there. So we want to start playing a little bit of a new volatility regime, right? This is a bit of a new options regime. So if you're looking at something, if you're looking at playing short-term options, they've gotten a little bit expensive now, and so have the long-term ones. So these are the kinds of cool things that you want to look at. You can see Micron firming again. I think it's still an interesting place. So if I were to go to let's say we go to a December. Oh wait, that's too far out. Could go to a December of 2025, and if you still really like it, you could do something like you could buy 100 shares and sell like a 220. You're going to grab about 6%. That's pretty good. You could sell a 210. So that's going to give you a little bit of nice upside, plus that 6%. You're going to give yourself a nice sort of position on something that's had a good run. Is it going to go to 250 eventually? But do we have the ability to play this very juicy option environment to now generate some income, right? Not when it's cheap, not when it's at 52-week lows. You want to do it when it starts giving you a little bit of value. So that's kind of the exciting part of this sort of market, is now you can kind of play a little bit of a grind up, right? We had the big move. That's the sort of easy money, right? It's never easy, but that's the easy money. Now we're at a point where we want to kind of play a bit more of a grind up. It's going to involve a few pullbacks. It's going to be 2 steps back, one step forward, 1 step back, 3 steps forward, 2 steps back. When you get into a sort of a little bit more of a fully valued stock or market, then you kind of get this. Do I think we can continue to go to 7,500, 8,000? Of course, at some point. But now you can play it and actually get some juice out of these options, which everybody has sort of pushed up drastically. Another one that is starting to look good is Datadog as well. So check out Datadog here. We started getting constructive on this nice breakout here. Here we go. Wonderful. Another one of my horsemen of the data apocalypse, the positive data apocalypse. And here is your Palantir, which had a little bit of bad news on Friday. They talked about how maybe the sort of distribution of the product was a little bit challenged with some news that came out that they are the quality of the delivery wasn't quite as good. So I don't know. You have to look into that a bit more. We don't have a position in it. We've played it twice. We played it all the way up to here. Then we got out. Then we played it all the way up to here again. So this is that more expensive one. And so that's why I kind of feel like maybe Snow and Datadog kind of have the ability to deliver a little bit more of that upside versus Palantir at this point. There's no way I'd get short Palantir at the moment. And then we've got Tesla, right, which I've been talking about quite a bit. We had a pullback in here, but it's going to recover because I still feel it's one of those great stocks that, you know, really represents a lot of where things are going, which is AI, robotics and automation, power. People don't talk about their power exposure, the power blocks, these things that are I don't know why no one talks about it, but they sell like, you know, hundreds of thousands, a million of these things. They are very much in the game of power storage and power delivery. And if anybody can expand that into many, many different revenue streams, it's going to be Elon, right? He's got the scale. So I think that's interesting. It's not, you know, I wouldn't put as much in this as an Apple. There's a lot of risk. You've got one guy, something happens to Elon, God forbid. This is the whole company, right? So you want to size very appropriately in something like this. So I think that's an interesting name, and then I think Google is unstoppable now. I think there may be a little bit of softness in Meta and Google lately from the ad. If ChatGPT gets into ads, that they are worried that that's going to pull business from these other companies. But Google in particular has an incredible not a stranglehold, but they are ChatGPT, but almost you know, monetizing and have the ability to monetize much sooner, right? They have the ecosystem, they have the endless data, they have the endless data plus YouTube plus, you know, all this stuff. They are an absolute powerhouse in terms of AI. So we've been adding positions there as it had come down a little bit, and I think that's also an interesting place to be. I've only got 1 minute left, guys, because I have a show to do in a little bit. But Google is a very, very interesting place. I think this is one where, again, why don't we do one of these fun little trades? Okay, we've got option pricing just kind of taken off here. And we do have earnings coming. So it's going to be a little bit of an issue there. But I think you have to decide. I wouldn't carry a high delta into earnings. I would do something like a turbo. But we didn't even talk about the turbo on USAR, which was looking pretty darn good this morning. So I think we could get back to those highs and probably push into the 260s, and that's where maybe you could also do a little bit of a cover call or a call with a little bit of extra upside. So you could buy some stock. You could sell maybe like a 250. 460. That's 11 days. Not really giving you too much juice at this point. But or you could do like a node. You could get in there, buy some stock, buy 100 shares, buy a 255, and sell a 265. That's going to give you an exit probably around like 275 kind of thing. So that's going to really give you a nice upside profile into what is very, you know, fairly expensive option pricing. So that's kind of a lot of what I'm seeing right now. I mean, I am seeing a lot more. You can see ARK, of course. This is one of the famous charts I brought you guys months and months ago. I said, listen, when this thing starts to break out, that is going to be a sign that the mania is truly, truly on. And it really shows very little sign of abatement at this point. So I think if you are a bear, as usual, I think you're going to have a tough time. You know, maybe you get a little bit of a pullback at some point. Anything can happen, but this is where you are really, really fighting. They're cutting rates into amazing earnings, profit margins. That never happens, right? That just never happens. And so you are creating massive amounts of liquidity. Credit spreads are narrow. Bond vol is relatively low. Like there's really very little sign. I know you can look at that and go, well, when there's no sign of fear whatsoever, then that's the perfect scenario for a big pullback. And, you know, for sure it could happen, but I don't see a lot to really hang your hat on. And one of my favorite things, as I've been talking about for a few weeks with members, is that IWM, the broadening, right? This bringing the fruits of the labors of all the hyperscalers to everyone else and to the broader economy, which is why I like that. Now, I think one of the key sort of underpinning forces to small caps is rates coming down. There is a chance that rates may not come down as much as we think, because if the economy is so strong, we've got great GDP numbers, good retail numbers, we've got like so many things are going in the right direction, even though there's always a layer of the population that's in trouble here and can't find jobs. Actually, the market doesn't care. I hate to say it, but the market and reality are just sort of different things, and it may continue in that direction. So that could be one area where there's a little bit of a challenge here, but I think that worry will be overcome by um, the broadening, by the benefits from AI to the larger sort of broader economy. So I think that can be overcome. I mean, you may not need rates to get absolutely crushed, and they are going to come down a little bit more. So that still is a tailwind. All right. Do I see MU hitting 210 by Friday? By this Friday, yeah, it's not impossible. It's not impossible, but it's had a good run. I think it probably gets to maybe 203, 204, but that's, we're flipping coins at this point. But it is not a very expensive stock, and that's what I liked about it. That it's getting into that memory area, that it's not getting into it. It's in the right area, and kind of under the radar, right? So that's what's happening to SOXO lately. It's not so much Nvidia pulling the broad, semiconductors up. It's some of those little plays that are there. So many of them are going to be important. It's like all hands on board, right? It's all hands on deck. And then we're going to get into edge computing, right? Now it's inference, which is going to go nonstop for years, and then we're going to get into edge, which is going to be, inference and AI in everything around us, in sensors and Internet of Things. So that the possibilities are still very, very positive. So, I mean, ideally, we get like a little pullback here at some point where we can kind of, maybe pick the bottom a little bit, and set ourselves up for the next run. But the farther we go to the upside here, the more kind of violent a pullback can be from a technical standpoint, right? So remember, even though the stories are strong, at some point there will be a whoosh sound. It's difficult to do in the last couple of months of the year because it's such a strong period, and we've already seen that. Does October weakness matter? Well, August and September didn't matter at all. We blew right through seasonality like it was standing still, like it was nothing, right? The market just said we couldn't care less, and that's AI, right? That is powerful. So if you're getting in here and getting bearish, it's one thing. I'm trimming in here. Somebody in the community said, "Oh, Hans, why are you trimming? Are you bearish?" I said, "No, are you kidding?" But I'm up like 100, 200, 300% on positions. I'm still a trader, right? If you are just going to sit on your hood, for example, for 10 years, then don't sell it. I think it's going to go to 300, 400, $500. Like, I think it's just, one of those names that just keeps going. If you're a trader and you're doing a little bit of everything and kind of stick handling through this environment, then, at some point you got to take some profits. And then you can always rehook, right? So you have to know who you are. And I always tell people that, listen, know who you are, know what your goals are, and think about it, right? If you have a very, very high beta type portfolio and something turns around and you lose 30% in short order, no one's going to be happy about that, but is that going to be devastating to you? So you really have to figure out who you are and what makes you tick. And that's one of those important things. But for right now, I'm seeing a little bit of a sign of a little bit of exuberance. I will say that. As bullish as I am on the storylines, I often look at the tea leaves that volatility traders look at. I look at skew, I look at fixed strike, I look at all VIX, all kinds of things, right? But when I look at some of these names, wow, earnings came out just now and they just went, oop, we dropped a little bit. And then they went, okay, let's rock and roll again. So this is not a sort of normal environment. It's the one I said would come when it turns into a mania. But here we are, and it is a little bit on the exuberant side. So it's an area where I have added some put spreads. I'm probably going to add a few more in names that I don't really want to get rid of, right? So I could go into, say, a Goldman Sachs and say, well, I've done really well in these positions. I can either get rid of them, or I can buy a downside put spread that's going to protect me for, say, $80 or something, and it's going to cost me some money, but I'm going to play for a potential pullback, a little insurance policy, but maybe it keeps going and it's going to retain that upside. Whereas if you sell calls, you're also going to give up upside. Okay, guys, I got to run, get prepared for another show, but thank you for coming. I really appreciate it. And check out optionswithhans.com. We've got some fun things there to look at, and some great value, and everyone's having a lot of fun. So thanks, Keith and Matthew, Luis. Thanks, everyone, for coming. We'll see you in the next one. I'm going to try to do this at least once a week so we can just hash it out. All right. Catch you later, folks.